Multiplication.
Okay, it's 11 o'clock. We need to get class started.
What is it? The day for the finance is it gonna be Tuesday or Thursday next week?
Tuesday.
Tuesday.
The
Tuesday.
exam Tuesday at 10 o'clock.
Yep.
Your taxes then is Thursday at 10. And my principals is Thursday at
8.
8.
I hate it in principal.
I told them to be here at 8:30.
You can get up at 8 o'clock. We have to get up early. You could
Well,
do it.
when you get into the world of work, you know, I get up here at 8:30 and I drive an hour. So I'm out the door at 7:30.
I drive 5 minutes.
Yeah.
I drive about 45. So I feel you on that one.
I was up here at 8:30 this morning, and I'll be with the college till 8:30 tonight out at Pipestead. We have a dinner. We're going to honor Dr. Bourne for all his years of service here, and we're going to honor a student. I can't think of his name, but we're going to honor him mainly. He's gotten wealthy, hoping he'll donate to the School of Business. we're gonna suck up to him. Basically, is what we're doing.
You do what you got to do.
Here comes Millie and Milika.
See, 11:01.
11:01, not bad. I had 3 to show up in principals. In 5 minutes, I had 4. In the next 5 minutes, I had up to 5. And then that one come in every 5 minutes for half an hour, and so I ended up at 8. But anyway, snow days. Now, in Serbia, did y'all ever have anything as a snow day in high school?
No, you go to school even if you need to hike.
But it doesn't really snow that much.
It didn't snow much?
It can happen.
If it rained or
I mean,
flooded
it
or,
snows, but it doesn't.
yeah.
But I live downtown, like they clean everything, and my school is in my streets, so it's not like I cannot get there.
Okay. But you know, it's okay. I don't think anybody should endanger their life to come to my class. However, what if they had a job at a bank? Banks don't close down on snow days usually. The government don't shut down on snow days. Our military don't shut down on snow days.
Yeah, but usually because those are cities and they usually clean the roads, and here they don't really clean anything.
Well, we got mountains too. In the city, you slide level. In the mountains, you may slide over a mountain.
You know how our grandparents like to tell us stories how they had to hike to school,
Yeah.
like kilometers. So
And they were telling you the truth. I had to walk 2 miles each way to school for 10 years.
yeah, that's what my grandpa would always tell me. You're so spoiled. I used to walk for 10 miles in the snow to get to school every day.
Well, he probably did. Things change. Okay, our exam is Tuesday at 10 o'clock. It is 50 multiple choice. All right. Now, in chapter 10 on standard cost, now I'm going to let you flat out have a total open book, okay? Because we've had to rush these last 2 chapters. We're going to have to rush ratios today. Now, do y'all have 1 book or 2 books?
One.
Well, one of you could use my book, okay? And
But
everybody,
mine is on the iPad. Does that matter?
yeah. Well, that don't matter. I don't like for you to use a computer or a cell phone in class, but if I let you use your book, you got to bring it up on something. If it's an iBook, right? So it'll be fine. Yeah.
I have my 2 ebooks on the desk, so I don't have the actual book. So
Well, you can use your ebook,
Yeah, that's what Bonnie is.
ebook or hard copy. So, but anyway, so we got a lot to do. As far as 5-point bonuses for registration, Kelly, have you registered, pre-registered? Jessica, Abraham,
Yes, sir.
Alexandra,
Sir.
you ladies?
Our last semester.
So everybody that's here will get 5 points for pre-registration. Now attendance, as far as attendance goes, it looks like the only one that might deserve that, let's see. Alexandra does. I'm gonna give him 10 points for attendance. Alexander only had to miss 1 day, and that was because he was taking Dr. Sneed's test. He was taking that class at the same time. Alexander Fanning, how many days have you missed?
None.
I thought you'd missed one, but I was going to give you the 10 points anyway. And I'll get through this pretty fast, I guess. Abraham, you missed quite a few days, haven't you?
Yeah. Probably like two or three.
How many? 6?
Huh? No.
You missed a lot. You missed about 2 or 3 days in a row when you went down for that.
Yeah. I mean, that was like 2 days, yeah.
Yeah. So for 10 points, you only missed 1, 2, or none. Robert Short. Okay, now how many days have you ladies missed?
I missed 3.
3?
I had a concussion for 2 weeks.
I know you missed 4. 4 days because of concussion. 2 days because you were in Knoxville with some old nut-headed boyfriend. But
Well, I had to take her to do
Yeah,
the
like we missed on Monday because I was taking
because
GMAT.
I was the driver.
I missed one because of tennis and once when we had problems in the
those
apartment.
don't count. I don't count tennis against you.
Yeah, and then I took GMAT this week, so I didn't come to class. And
And I was
once
the
when we
driver.
had
It's not my fault.
when we had a problem in the apartment. So that's 3.
Now you were in Knoxville and you thought it was too much snow.
Yeah,
Yeah.
because she was supposed to drive in the evening.
All right. Anyway,
And I had to drive her at 8
Millie,
a.m. and 11.
the way it looks, you all don't need the 10 points anyway. Jessica, you've been here, haven't you? And Kelly, you've been here. Okay. But grades in this class are pretty good. And this exam, I hope, don't bring them down. So let's get down to business. There's one term in this chapter 10. Now, I tried to give you some assignments on 10. And I hate to rush assignments, but we have to. I've got to get in and give you some clues on chapter, 15 on ratios? Only 2 chapters. We will not have chapter 14 on cash flow. All right? But in chapter 10, please know that formula that I gave you the other day. Now, most of the variances in chapter 10 that I gave you are materials and labor. We don't have that many on overhead, which is fixed and variable overhead. Now, does anybody remember, Jessica, how you get a materials variance? The overall variance. Do you remember the formula for the overall materials variance? Anybody? Evan?
It's like the, well, for total variance, I have written down actual cost minus planned cost.
Yeah.
Actual cost minus what?
Planned cost.
Which is standard. Okay, so that's the same thing, Kelly, as actual times actual minus standard times standard. Actual times actual gives you your actual cost. Standard times standard sometimes is the budgeted cost. That gives your overall materials variance. Now, what do you take the difference in price variance? How do you get a price variance, Evan? Now, Evan, you've only missed what, 1 day?
Yeah.
Okay. Anyhow, I go by memory. Some people go with a grade book putting attendance. But anyway, how do you get a materials rate variance? It's the difference between what?
Actual minus standard times actual quantity.
No, okay, let's just look at the simple part of it. To get a material rate variance, take the difference between the standard price of materials and the actual price of materials. All right,
Can we have those written down just that?
you can have the whole book.
Oh, that's right.
All right, but you can have those written down too. All right, so you've got 17 questions from this chapter. 17. And most of them are some type of problem. But some of them may be worded problems like I was just giving you. How do you get a labor efficiency variance? On top of your head, how would you get a labor efficiency variance?
Applied actual hours minus standard hours times the standard rate.
All right, it'd be actual hours minus standard hours times the standard rate. That will give you efficiency. So know how to get those different. And there's 6 of them. The overall materials, the usage and rate variance, price variance, and labor. All right, now you will have overhead, variable and fixed. Now, you math people, what does a deviation mean? Deviation in mathematics.
It's like the difference between the.
All right,
It's how
can
far
you,
something's away from the average.
what?
It's how far like a data point is away from average.
Can you all find me the word deviation in chapter 10? It's got to be there. Maybe it's got to be there.
It's not a vocabulary word, it's like a key term.
It's not? All right. I could have swore I saw that on the test when I made it up. But if we don't find it here, I'll give you some clue about it on test day. All right, look at page 534 if you would. For test purposes, this is about the way that I set that up in a format. This is about the way that I set it up the other day. This works for materials, this works for labor. In your first, this is example 10.4 on page 534. Actual times actual. And then the blue box is standard times standard. If you take the difference between actual times actual and standard times standard, what do you get down there for total variance? You have 2,002,970 unfavorable. Now what do we put in the middle of those like I did the other day? Standard times actual quantity. Standard price times actual quantity. Now you can get your other 2 variances there, your price variance and your usage variance. So put that into memory or know where that page is on test day. And the same thing for labor. All right, now did I give you a couple of problems assigned on this chapter? And what were they? Yes, we usually have them written down. Problems what?
43, 46, 47, 56, 57, and 74.
All right, we've got about 10 minutes to go over 6 problems. And so if you would look at problem 43. That's after the brief exercises, I guess. And that's on page what? 5 what?
It's no idea.
It's on page
560.
568. Please turn there. Alright? Standard quantities of labor and materials. Calculate the standard hours allowed for a volume. Now, you may have to do some of this on a test. It's not always find the materials rate variance and find the labor efficiency variance or find the total variance. It's finding what the standard hours is or what materials was used. So here, compute the standard hours. How do you compute? Alexander, let me start with you. We're doing, how many units?
Be 15,000 times 5, give you 75,000 hours for number 1.
All right, now what is the 5? 5 hours, what, per unit?
Yes, sir.
All right, 5 hours. Now, where'd you get to 10,000?
No, it's 15,000. That's what it was given at number 1.
Yeah, 15 times 5, right?
Yes, sir.
All right, let me bring these up because we're going to have to look at them real quick, I suppose. Okay, on the second part of that, we'll compute the standard number of kits and cabinets. Did you have anything on that one, Jessica? Part 2?
Part 2
Yes.
was 1 times 15,000 equals 15,000 each for kits and cabinets.
All right, now just look at these answers real quick. Alexander gave me 75,000 hours. That was 15 times 5, because it takes 5 hours per whatever. And Jessica, where did the 1 come from?
It came from up top.
The standard quantity
Yeah, the
times
standard.
15, that's those kits. Same thing would be for those cabinets. Now, 3, I didn't ask anybody that, but this is standard hours. Unit labor, standard times units produced. All right, 15,000 hours. Divided by $5 an hour would be what, 3,000 units. That's just working backwards. So no little exercises like that, okay? Okay, problem 46. These, I should have these things, of course, in Moodle, or I hope I do, but a material variance. Break down the total variance for materials into price and usage, and of course total. Refer to the information on the previous page for Centuria, whatever company. What problem was that?
Little box.
The little box on page 569. All right, you had leather, 3 stripes times $4 a piece. That's a standard 12. Direct labor takes 3/4 of an hour, or decimal 75 times $12 is 9, and then total prime cost. Prime cost, that comes back. Labor and materials is prime cost. Conversion cost, remember, was labor and overhead. All right, let's just take a minute and look at this one, see if you have any question on number 46. All right, number 46. They set it up like I would set it up, okay? I just set mine up vertical, they're setting theirs up horizontal. Actual times actual, standard times standard. And if you take actual times actual from standard times standard, what do you get? Take this one from this one. How much?
Used to be the 61.
You should get the what?
The 69,000.
Shouldn't you? Now, if we take the favorable variance minus the unfavorable variance, we also get to 69, don't we? So always check and get your total variance. So total variance 69, favorable price, unfavorable usage. And favorable price, we're paying $3.60 instead of $4. Why are we getting cheap material? Maybe we live where it's made. Maybe we don't have any transportation on it. Maybe we have good transportation into it. However, over here, the standard usage was how much? 276, but we use 287.5. That's unfavorable, right? Would you ever think that you got a good cheap price on them, and you got good cheap material, you had to throw away a lot of them, and that made your usage versus unfavorable because you got so buy cheap on the purchase price? So if you buy cheap materials, you're going to have more waste, aren't you? And that's what could have happened here. We might have bought inferior goods. Or we got some wasteful employees. Or we have inexperienced employees that mess things up. Okay? All right. Those are just variances again. 47, pretty much the same thing, but 47 was. And labor. All right. Your labor rate variance is 39,100 unfavorable. Your labor efficiency variance is 110,400 unfavorable. Now we're paying what, $12.50? And the nation as a whole is paying $12. Why do we have to pay more? Why do we have to pay more? Well, McDonald's, for example, in D.C., can they get by with minimum wage? They can. Jessica, yeah. Could you live in D.C. for $7.35 an hour?
Oh,
Well,
their
it'd be their minimum wage.
Yeah, it would be
not
their
not
minimum wage.
Right.
So technically, yes.
Well, West Virginia, the minimum wage is what?
$8.75.
It's better than most states. It's $7.35, matching federal. So, does this have something to do with minimum wage in the area? Don't know. Could have. Are your workers more experienced? Some of them stay around too long, like me. Or they should retire, like Mr. Lilly and Mr. Lilly and a couple others should retire, along with me. Anyhow, so something makes our labor 50 cents higher. But now how about the labor efficiency variance? Still unfavorable, isn't it? Because we're using how many hours? 78,200? And the standard is 69? These people must work for Bluefield State. Okay? The efficiency variance at Bluefield State would probably be pretty low if we did some calculations. Now, like Robert, I'm going to take you for example. You're a student worker. What is your productivity?
What do you mean? Like, what do I do, or just
Yeah, what do you do? What is your productivity?
you're getting the mail, just the paper and the copiers?
Okay, you get paid 20 hours a week. You probably work really 2 hours, and then you could study the other 18. Is that about right?
Sure.
I mean, is that about right?
I mean, yeah, probably.
Now, Kelly works up the business office. She gets paid for 20. She probably works 18, right? So, who's more productive? Kelly is. but it's not Robert's fault. He's a student worker for our school of business, and we don't give him a whole lot to do. It's our fault, okay? It's Mr. Imels and Michelle's fault that Robert don't stay more busy, not his. Okay, but that's looking at efficiency through a different microscope, I guess. Here, the number of hours or the dollars paid. So we've got two unfavorable variances giving us a total unfavorable variance of 149.5. Now, unions can drive up wages, can't it? Unions can drive up the wage. Your company may be unionized and the industry as a whole is not. Usage, either there's a lot of waste, you got a lot of downtime, maybe you got old equipment. I worked at Chrysler Corporation, and if the equipment broke down, we got to sit around 2 hours till it's fixed. We weren't efficient during those 2 hours, were we? Okay, so know your materials and your labor variances. I think you'll get those with no problem. Number 56, moving over to number 56, which is a compute the standard hours allowed for actual deliveries, compute the variable overhead spending and efficiency. So there's not a lot on the test about variable overhead spending and efficiency, but you may have one problem out of those 17. So I wanted to look at this one. Kelly, do you have an answer on number 56?
For number one, the first part is 30,880 direct labor hours.
All right. So Kelly took what? Just the 38,600 actual deliveries times standard direct labor hours of 0.80, and so that was 30,880 direct labor hours. Deliveries, we know there's all kinds of deliveries now, whether it's FedEx or UPS and what have you. But anyway, the variable overhead analysis here. All right, you had actual overhead 157.7. You had budget overhead 158.1, and you had applied overhead. You know, we have these applied rates that we calculated way back in chapter 2 or 3, and that's 157.480. So your efficiency variance is unfavorable. The spending variance is favorable. Why is the spending variance favorable by 400? Because the actual was what? Less than budget. Anytime you can come in less than budget, that's pretty good, okay? And why was this unfavorable? Because your budget is more than what? The applied. Okay, so get a handle on those variances for this chapter. Now we had 57, that's a fixed overhead variance. And Evan, did you have this one worked?
57?
Yeah.
Yeah, I got $12.50.
All right, and did you get 3,400 unfavorable and 14,000 unfavorable?
Yeah.
Okay, see, I got lucky this morning. I called on 4 people who had their homework. Okay. Jessica, Kelly, Evan, and Alexander. Now that's 4 I called on at their homework. Billy, you got your homework, don't you? Usually, you don't.
No, I'm gonna study this.
Y'all were out of town, you weren't here too, but you two usually have your homework.
I was too stressed this week.
And once or twice a semester, Alexander has his homework. Is today one of the days?
Yeah.
Good. Okay.
See, the key is to threaten me to make the test easier if I have my homework. I'll do it.
There you go, okay. But anyway, most of you in here get your homework, so that's good. Now, number 74, one last problem, and we'll finish this chapter. Number 74 overhead variances once again. During the year, this company produced 119,000 units, worked 87.9 direct labor hours, and incurred actual fixed overhead of 1.3 million, and of course actual variable overhead of 927,010. Calculate the standard fixed overhead rate. Now, Alexander, on 74, if you got that for you have answer to number 1.
For the standard, fixed, I got $2.68, and then for the standard variable, I got $1.85.
All right. Let me get to that one. I hate trying to rush these things, but we have to today. Okay, now Alexander, back to your answers. You got what now? Did you get to 268?
Yeah, for the fixed overhead, and then for the variable, I got $1.85.
All right. And anyway, let's just look at the rest of these answers due to the time factor. Here for number 2, we had a total variance, factor overhead variance, total of 24,320 under applied. And total variable overhead variance, that was fixed, this is variable, 46,410 under applied. So they're both under applied. Now fixed overhead analysis, the spending variance is 13,600 unfavorable, and the volume variance is 10,720 unfavorable. Now, we know the spending is actual versus budget. We wanted to spend 1,286,000, but we spent 1,000,003. We know that's unfavorable, right? And the college up here cannot spend over. That they want to have every bit of money they have spent by June the 30th. But now if the college spends over, I don't know who they borrow from. Okay, so, but now your budgeted versus your applied is also your volume. Volume is unfavorable. Volume has to do with units or hours worked or whatever. Okay, now that's wrapping up basically the main points in chapter 10, those variances. So now we will move on to chapter 15, and we're skipping 14. Now from this chapter, and it irks me to have to miss cash flow, but we just don't have the time. I need to give you a bonus problem from chapter 15. But now first off, you've heard of horizontal analysis, right? Okay, I'm going to take a minute and look at PowerPoint with you on this chapter. These are called common size statements, a vertical or horizontal analysis, whereas you turn everything into percentage points. And I remember specifically putting a couple of those questions on the test about vertical and horizontal analysis. You'll have your book. You may be able to find them. You may not. I don't know if I'm hitting on solution manual again or. Okay, there's one, MOWR. Do you see another one? Here it is. Okay, that's PowerPoint. This is the one I want. Okay. Alright, how to prepare common size income statements using base period horizontal analysis. The base period is when, what is the base period? What year is the base period, base year?
Should be your one.
Should be one, shouldn't it? Alright, now sales jumped up to how much? 100 and what? What percent increase is that? 100 divided into 20 is what? Is that 20%? Or 100 divided into 32? 32%? Now, that's horizontal analysis of when you're comparing 1 year to past years, usually. 1 year to past years. And you see, without all this detailed stuff they're going into, we got the same answer, didn't we? Alright, so year one is your base year. Alright, and of course sales went up to 120, up to 132. And here we're letting gross margin equal 100%. And there you have, now divide 40 into 45. Up here you divide 100 into 120 to get to 120%, or add the 20 on that we calculated. But you see you're comparing 1 year to the next. Alright, now a vertical analysis. Alright, what represents 100% on vertical analysis? What? What number is 100% on here?
Your sales.
Sales? Yeah, divide 100,000 into 12,000 and you get 12%. Divide 100,000 into 20,000 and you get 20%. Cost of goods sold is 60%, gross margin is 40%, net income is 12%. That is a common size statement, vertical analysis. Alright? And here you are with these percents that I was spouting out a minute ago. Divide everything by 100,000. Now, if it were a balance sheet, I don't see a balance sheet. If it were a balance sheet, what would be 100%? If this were a balance sheet, total assets would be 100%, wouldn't it? And also, total liabilities plus equity would be 100%. If it were a balance sheet. Now let's get into some ratios. Now here we're looking at family of ratios. Your principal book didn't call them families. You can get a computer program that will calculate any of these families of ratios. The liquidity ratio is usually the current asset, current ratio, the quick ratio, the accounts receivable, and inventory turnover ratios. Those are liquidity. What does liquidity mean?
How quick you can convert something to cash.
Alright, so we're talking about our current assets. Accounts receivable, we should be able to sell them, collect, cash is cash. Leverage ratios, we'll look at those in a minute, or profitability ratios. But right now, know this family, liquidity. You may have a question on the test. Now, if I put 17 questions on the test from chapter 10, I don't know if I gave you 40 or 50. If I gave you 50, you got 33 questions from chapter 15 because there were so many of these ratios. So half of 2/3 of your grades coming from this one chapter. I figure with open book and your past experience on ratios, you're going to be okay. Alright, so here are your liquidity ratios. This may very well be a multiple choice test. And I would put one in there that's not the answer. Okay? Which of these four is not a liquidity ratio? It would be depending on which one but accounts receivable, inventory, liquidity, that's your inventory, accounts receivable, and cash, and current assets. Now we know the current ratio, don't we? Current assets over what? Now I've always said in principles, or if I teach intermediate or cost or manager or wherever it comes up, that should be at least 2. 2. Unless it's something like a utility company, they can operate with a lesser ratio. You should have 2 times your current assets, and it's really expressed as a ratio 2 to 1. You should have 2 times as many current assets as you do liabilities. All right, I've had students before on standardized tests. I had a student on a CPA exam, and I had a student on a PBL test, national. They missed this because they'd never heard it called one or the other. The quick ratio is the acid test ratio. They're one and the same. But here, we take our current assets over our current liabilities. Usually, we keep these 3. Usually we take out inventories. Another way to write that is minus inventories. Current assets minus inventories. All right. And some books take out minus prepaid expenses. But anyway, you'll have your book and you have this definition, okay? That's all you need. All right, calculate the current ratio on this real quick. And calculate the quick ratio real quick. Okay, now for homework, but now listen up on homework. You have the exam on Tuesday, I guess, right? Okay. If you have problems 60, 56, 57, 58, 56, 57, 58, that's a review of all the ratios. If you have those 3 problems worked, ready to hand in Tuesday, then you can omit 3 questions on your exam. 3 of any ones you want. Okay?
So like, if you grade them, will you just take off 3 that we missed?
Can we do it that way?
I can do it either way. You can leave 3 blank and I'll add back 3 when I grade it. Or,
Just add back 3 what we
Yeah.
missed. Cause I don't know what I missed, I don't wanna like omit one that I got right.
Yeah.
okay,
That would be my
then if you had in your homework then,
Yeah.
you can miss 3 and still make 100. Okay. It's good practice anyway. Now on this one, what is the current ratio?
2.4.
You see, 2.4, now you can put times after this, or you can put 2.4 to 1. That means you have 2.4 times as many assets as you do liabilities. 50 divided into 120, 2.4. Now to do a quick ratio, we only add which ones?
Cash and accounts receivable.
Cash, accounts receivable, and that's it, right? What was your quick ratio?
0.9.
Alright, that normally in the country as a whole should be at least 1 to 1. Should be. So the current ratio looked good here, but the quick ratio is sort of poor. There's your answers. Alright, we're rushing through these, but accounts receivable turnover. Average accounts receivable is, how do you get average? How do you get that average?
Beginning plus ending divided by 2.
Beginning inventory plus ending inventory divided by 2, sure. Do the same thing with inventories or whatever. Alright, accounts receivable turnover in days, I've showed you this before. Use the exact days, not rounded. Okay, take a minute and do this, folks. Just got a minute. Has anybody got part 1 yet? The average accounts receivable is pretty easy, what?
100,000.
And the turnover?
7.5.
7.5.
That's what I got.
Divide that into 365 and you get what?
48 and 2/3.
How much?
48 and 2/3. So it's 0.66 repeating.
Alright, we can't have part of a day, so it's 49 days. No matter what, it's 49 days, even if it's 0.2. Alright, these are still liquidity ratios. And would you want this number right here to be big or little if this was your company? Would you want that number to be big like a basketball score or little like a golf score?
Big.
Big.
You want it to be big? Because the bigger it is,
The less days it takes.
the quicker you collect your accounts receivable. Here, if your terms were 210 net 45, you're doing bad collecting. If they were 210 net 30, you're doing terrible collecting. But if you're doing 210 net 60, this wouldn't be bad, would it? You got to know what your credit terms are for this to be good or bad. We don't know. All right, you can use this formula. You'll have no trouble calculating these ratios. All right, now inventory, pretty much the same thing. How do you get average inventory? Beginning and ending divided by 2, divided into cost of goods sold. Then divide, I'm glad this book does it the way I do it. Just divide that into 365 and you're finished. Other books does it such a long way around, and there's no sense in the way some of the books do it. All right, work this one real quick. We got about a minute on everything. Looks like average inventory.
85,000.
Divided into gives you how much turnover? 4, 5, what?
4.7.
And if you divide that into 365, what does that give me?
77.7.
What?
77.7.
So 78 days.
All right. Would you like for that number 4.7 to be big or small?
Big. I mean, you're selling more. Or no, inventory.
Small.
Inventory said it's small.
But with this number then, would you like it to be bigger than 5 or smaller than 5?
Smaller.
All right. Let's go.
If you're turning it over, then you'd want it to be big.
Yeah, like, are you selling it or are you having to, like,
Well, now you're selling this. You're turning your inventory over 4.7 times a year. That is not Belk. They turn theirs over about 2 times a year. That is not Food City. They should turn some items over every 3 days, which is their turnover is 310 maybe. The bigger the better. You want to turn over inventory. If you turn it over, that means you're selling it. If you're selling it, hopefully you're getting a profit. So, bigger the better. And here, what does that 77 days mean? What does it mean?
How long inventory stays.
How long it's what?
Basically, how long it's in your inventory.
You got it on hand that long. Now, what was our average collection period just before that? You had it a minute ago. 47, 48 days?
49 days.
49 days rounded. Now add those two together.
It's 127 days.
It takes you 127 days. Time you hold your inventory for 77.7, and it takes 49 to collect for it after you sell it. You've got your money tied up in inventory 127 days, which is 1/3 of a year. 4 months. All right. Now these two added together, that number has a name. Does anybody know what the name of that number is? It's got a proper name in some book somewhere. I don't know it right now, but it does have a name. Okay. We got to skip how it's used at Alpha. Now we got to go to leverage. When you talk about leverage, you're usually talking about interest rates, debt ratio, debt to equity. So you're talking about debt when you're talking about leverage. Now, Leverage in a corporation is how much they finance with their own money, stock, or how much they finance with debt. That's called leverage. Debt is still leverage. Debt here is leverage. All right, so the hardest one here now I usually call this EBIT. All right, we know that I is what? Your interest what? Interest what? Now up here, it's I, B, T, I. It's IB. Income before taxes and interest. Mine was the same thing here. Earnings before interest and taxes. EBIT, EBIT. But up here we can do IB, which is income before taxes and interest, divided by interest. That's how many times you can pay your interest. Well, some people find that one the hardest. Can you calculate that real quick? What is your interest? Here's your income. Here's your taxes. Now what's my IBIT? IBIT?
18.7.
IBIT is what?
18.7.
18,000.
Oh, she already.
Oh, I just did
did
the
it.
answer.
Yeah.
18.7.
Oh, you did the complete times.
Yeah.
Times. So you're earning 18.7 times your interest expense, then you're probably in pretty good shape. So I, B, T, I. IB. Divided by I. Okay, so that's not bad. Okay, not bad at all. Debt ratio is total liabilities over total assets. All right, calculate the debt ratio, total liabilities over total assets. Then calculate the debt to equity ratio. I heard a student was up on the third floor, maybe yesterday, arguing with the professor. What would be one of you all arguing with a professor, would it?
No, not this time.
Not this time. So you weren't involved? Do you know who it was? What student? Anybody? I don't know what student it was either. I know what professor it was, and the professor simply should take a student in his office and not fight with them in the classroom or hallway. Okay, so much for that. What answer did you get here? Anybody get an answer?
0.6 for the first one.
Second one? Anybody?
1.5.
One what?
1.5.
All right, here, total liabilities over total assets. So your liabilities represent 60% of your assets. So your creditors own 60% of your stuff, and you own the other 40. That's what it amounts to, just like a car. here, total liabilities over equity. Well, this is your assets, what they're worth, but here, liabilities are 1.5 times what the investors have invested. Now, some people like for that to be one, some companies, they like 50% debt and 50% equity. Look at some profitability ratios. Alexander mentioned these the other days. He mentioned all these ROEs and ROIs and ROAs or whatever. But Alexander, we'd have to call this one then ROS. You can put that R on anything. Return on sales, net sales, income over sales. This is just your profit. This is just your net profit for the whole company, 4.6%. Now, 4.6% net profit. Now, if your sales were just $100, how much net profit would that be? 4.6%. $4.60 wouldn't be much, would it? So it don't mean anything unless you know. But if you had 100 million in sales, wonder what that 4.6 would grow to. Wouldn't be bad, would it? So that's all in perspective. Now, return on total assets. Take your net income. All right. Now look at this one. This is income plus I. Now look at this. Jessica, you're in taxes. What's that saying right there? 1 minus what?
Your tax rate.
If the corporation's tax rate was 40%, what would I put in here?
1 minus.
Yeah, it'd be 0.6, wouldn't it? So notice that when you get to that formula and do practices in these problems for next week. Now, this is ROA, return on assets. Now, if you had $110,000 and you put it in savings and you got 5%, that would be, how much is that, $500? So what is your return on investment or return on assets? 5%. How do I calculate that? I divide 100 by 10,000 and I get 5%. Keep that in mind when you're working your homework. Return on stockholders' equity, this is ROSE, I guess, or ROE will be fine, return on equity. All right, this is easy. You've had it in principles. Take out those preferred dividends, okay? It's income minus preferred dividends over average common stock. And hopefully that's just given to you. You may have to take beginning and ending. Some books go into that deep. All right. Okay, be sure you get EPS. I definitely put a couple of problems concerning EPS on the exam. Net income minus preferred dividends divided by average number of shares. All right. Calculate earnings per share and then be able to calculate, I have to give you the market price divided by EPS gives you price earnings ratio. A lot of investors look at that. Okay, we had a speeded up rush day. I think you can do it. You can use your books, do your homework, and I'll see you Tuesday at 10 o'clock. An hour early, right?
Can I have that tax problem? I got a message from work. I have to be there at
Are you gonna
1.
leave?
I have to be at work at 1,
And tax class starts at what?
12:30, and it takes me 30 minutes.
Well, I've got a lot of explaining to do about that tax law. That's one from the book.
Well, I can watch the video
Watch
as
the
long as
video.
you record it.
Okay. Well, let me, quit recording here.